The Bitcoin bottom looks like it might have been put in. We've got the breakout of this beautiful falling wedge, as you can see here, the retest, which we highlighted on yesterday's show right here. And then, of course, the bullish divergence on both the RSI and the money flow that was setting up. In addition to this, we're seeing major integrations and implementations getting deployed today with Ondo, which doesn't just signal what's going on with Ondo, but this also highlights the absolute overwhelming need for the plumbing that is the blockchain infrastructure layer. And that's going to also highlight Chainlink and Ethereum with this Ondo global markets rollout. So everybody hit that like button, hit that subscribe button, ding the bell. We got some major signals that we got to look at today, because it's not just what's going on in the charts, but also a major signal that might be suggesting that an enormous amount of money printing is just on the horizon, let alone what we're seeing with quantitative easing coming back into the fold here in the matter of a week or two. So hit that like button, hit that subscribe button, follow us for more. We're about to kick this off. So let's get into it here in just a moment. Don't worry, everybody. We're getting going, just getting this shared out. Everybody, I want to know right now, have you been worried? Market bottom? Are you back to being super bullish? Well, we're going to be highlighting exactly what you need to be paying attention to here in just one moment. So everybody, make sure you are paying attention, because the major signals are here. So let's make sure we're doing everything we need to. We're kicking this off as we speak. Just give me one moment as I put this out on the other channels and make sure we are getting it done. Ready to get it? Let's go. It's that time of day, everybody. What is it? It's that time of day where the market is just jostling people about. It's all day, every day, but we're getting incredibly bullish economic signals right now that are suggesting that quantitative easing that everybody's been waiting on. In fact, it shouldn't matter to Bitcoin and the crypto market, because we are changing the entire world as it integrates onto the blockchain, as seen today with the launch of Ondo Global Markets, bringing over 100 different assets on chain, which is also going to highlight things like Ethereum and also Chainlink, and also just the awareness factor of what goes into this when you're getting these major different stock and commodity and security indices being brought on chain. This is bringing that sort of corporate, global, big money pocket awareness to what's going on in the crypto ecosystem. So let's make sure we're paying attention to what's going on, because even when we're looking at things like Bitcoin, which we're all so excited about what's going to be happening here in the near future, this is case in point, breaking out to those levels we talked about. I highlighted it the other day on my channel, but also on my Twitter page, watching for down here when price was down in this region, watching for a breakout up to that $111,700 range. And we have gone beyond that. If we come down here to the 15-minute chart, I want you to notice, look at exactly where we're butting our head up against. Look over here on the right where the cursor is, right at 111,700. 11,700, 11,700. And then we broke free, but yet again, it's crashing. I'm here to tell you right now, everybody, if you're looking at this sort of price action right here as a crash, then you are not going to make it in this market. Just be aware of that. If you're looking at this right here, this drop, and you consider this a crash of the market, then you are not going to make it in the market. Because when we're looking at this, especially zooming out on this over time and realizing the price action has done such beautiful, this doesn't even go back all the way. This only goes back to 2015. Why? Because this is the Coinbase chart. If we look at other older assets, older charts like the BLX, which is basically the index of all the different pricing and different exchanges that have been available to show, this goes back to 2009. And look at this beautiful chart, just stair-stepping its way to the upside, having violent moves to the upside. Oh my God, the market's over, the market's dead. You get those Bitcoin obituaries that have always proven to be the absolute best times to buy, to another launch parabolic move to the upside, a little bit of work in here. And then on this case, we have the healthiest bull market we have ever seen. And yet people are still questioning the veracity of the bull trend that we're seeing here. Have we topped? No. How the hell could we have topped if we have quantitative easing that's coming into the picture here in the matter of about 14 days? How could it have topped when the world's most impactful government, the US government, just opened the door, the gateway into positive regulation? How could we have topped when we have corporate treasuries buying more Bitcoin on like 10x the amount of new Bitcoin that are generated daily? How could we have topped when pension funds and when 401ks and when retirement accounts and world, I mean, there's no way in my mind that we have topped. And I'm stacking as such. You've got to do what you're going to do. But what I see here is a very healthy bull trend of just rise, retrace, continuation. And we've talked about this ad nauseum over the last year or so. But even as we get into this, it's getting a little bit more precarious because now people are looking at it must be the 4-year cycle and we're going to top here. Well, I have to ask you a question. If it's the 4-year cycle and we have to top there, what do we do about the correlation between Bitcoin and the global liquidity? What do we do about the fact that Bitcoin is outpacing the rate of adoption that we saw with the internet? In a big way, mind you. So if that were to be the case, even if we went at the same pace as the internet, that would suggest we'd have about 1 billion users on Bitcoin by 2030. 1 billion. Currently, we have something, it could be argued, but somewhere between 60 million and 150 million people. So this would be roughly about a 10x just in user growth. Well, what happens right now when we have an overwhelming and exponential demand that's come in from corporate stacking, from government's awareness, and they're starting to set up basically sovereign Bitcoin reserves. And then we also have to speak about the mass influx of retail or just the everyday person getting involved and getting integrated and utilizing, whether they're using Bitcoin for payments. But why would you do that? Bitcoin's a store of value. But what if you live in an area that the money, basically inflation is all over the place and just completely devaluing your local currency? But here in the Western world, we say, how could you spend it? We just want to stack our wealth. Most of the world doesn't have the privilege to even consider that wealth. You need to realize the privilege that you're in, regardless of anywhere that you're at in the world. There's something that you have that somebody else doesn't. So let's find gratitude and also realize that within that gratitude, we can look at the data sets and realize that the pressure here is only going exponential. So when we're looking at the price and we say, but isn't this high? It already went up to almost $125,000. We're coming into the 4-year cycle. This must be topping. I beg you, go look at the data rather than just being subjugated to your emotional fears and your emotional hopes in this market. Stop getting your expectations broken. Let the data, let the ingredients of understanding the situation here help dictate a better strategy to navigate this market. Because when we understand the fact that coming back over here, going to CoinMarketCap right here and realize, look, we're back here at, where is it at? Just under $4 trillion. We have the fear and greed still basically on the low side of neutral, basically right there near the fear. The altcoin season index is kind of right in the middle. We're not really seeing the fireworks anybody wanted. But yet again, this goes back to that cycle of broken expectations. That doesn't mean it's not bullish. It just means there's a slightly different trajectory and things aren't happening when you are expecting them to. This is one of those reasons why you need, and this market's going to do it to you if you don't figure it out yourself, you need to be patient and you need to figure out where you're stacking, why you're stacking, what your entry strategy is and what your exit strategy is so you stop becoming a victim of yourself. And the reason I say that is because when you look over here and realize the US debt just went up over $1 trillion, $1.1 trillion since July 2nd. So in 2 months, we've added $1 trillion to the US debt. Now, consider this. It took the US 205 years to reach just the max, the total amount of debt we had in 1981. We clipped past $1 trillion in national debt. 205 years it took to get there. And now we're at a place that's a complete runaway, basically fiat, just debauchery out there with how our system runs. We've increased our US debt by over $1 trillion in the matter of 2 months. And you're telling me that they're not going to money print soon? You're telling me that Bitcoin, the inverse relationship to this entire fiat fiasco, you're telling me that it's not going to benefit because it's the ultimate capture mechanism. And we're seeing an overwhelming growth in the gold market in terms of the price per ounce. But we're also seeing Bitcoin just now entering the world stage and already has ETFs and has broken basically every record that we've seen with any asset ever, including gold, with how much money is poured into those ETFs. And in fact, it wasn't just one ETF. There was two ETFs last year within about 3 months that basically both reached, it was Fidelity and BlackRock's IBIT. They both reached over $10 billion in assets under management individually. So that's $20 billion, both of them. But even standing by themselves, whether it was Fidelity, whether it was BlackRock, they had beat the previous record of any ETF to get to that level by like 3 years. Guys, the appetite that's here and the fact that the doorway's just opened and the fact that people still think that we're going to have some 4-year cycle, 80% sell off, you are doing yourself no service falling victim to historical trends that are, close that door, that are no longer, I don't want to say no longer relevant, but the impact of where we're at in the timeline of Bitcoin is what's most important right now. So understanding this right here, you got to, if you're not going to stack Bitcoin, figure out what other utility play you're going to have your focus on as the world moves towards this basically blockchain integration, the migration from the analog world that we've been in. It was digital, but no, this is finally collapsing in on itself in a positive way, having transparency, having the trustless nature, because we have so many billions of people in the world. We can't afford to trust all the whatever the word is, malfeasance. There's the word that we've seen by this sort of social responsibility, dispersion of responsibility, because there's so many people and everybody's out for themselves. Well, great. Let's collapse that in on itself and get blockchain. And this is why this is so important, that we're having runaway debt, which is going to lead to runaway money printing, which is going to lead to runaway inflation, which is why we come back over here and we look at Bitcoin. This is a representation of that bad money policy. But in this case, you're capturing the bad money policy into something that stores that into something that you have for later, because there's a fixed total cap of only 21 million, because there's over 60 million millionaires in the US alone. Over 60 million. So not even every millionaire, which are pretty well-off individuals, not even every millionaire in the US alone can have one Bitcoin. Do you understand this? When you start realizing these things, and I know that a lot of you watch me on a daily basis, sometimes you might think I'm repeating myself, and it's just because sometimes this has not really sunk in with you all. I forget it myself sometimes. I get a little, oh man, God dang it, why did it go from 120 to 108? Man, is it going to go back to 90? We get worried in this near-term bullshit. Guys, let's stack for our future. Let's take a percentage of our portfolio and trade it, sure, but make sure it's a percentage that the profits you are rendering go back into your longer term hodl, because we are at an inflection point in the world, in global finance right now. And the fact that we're getting so sidetracked by the noise in the market on the 4-hour chart, and we're going to look at it on a daily basis. We're going to talk about where things are going and what the trades are going to be, sure, but make sure, what the hell is on my lip? Make sure that it is a percentage basis, not your entire portfolio, that you think you're smarter than the market. That, okay, well, you know, I've been adding, but now I'm going to leverage trade 90% of my portfolio and I'm going to be rich tomorrow. I've done that. I've lost $100,000 in 2 trades in about an 8-minute span. Don't do that. Trade, but do it smart. Trade, but do it with not only conviction. The conviction comes from looking at the ingredients and setting up because you're prepared for the moves. You're not jumping into a trade because it's moving. You are prepared for the moves. A great example of that. And I was really trying to make sure you're all prepared, especially those of you that are in the Discord. And, you know, we got the whole crew in there, DZ, myself, Josh, Drew, Tim, TJ, we're all in there sharing all these things. And I even shared this one publicly. This breakdown here that's so scary had the ingredients suggesting the bounce was going to come here. What was that? On the 8-hour chart, we saw this massive bullish divergence. The RSI, the strength. Is it very strong? Is it very weak? Think of it that way. Well, it came down here. It was very weak, but now these lows are getting a little higher, meaning it's getting a little stronger. It's getting, it's getting a little higher, getting a little higher. Now, these are the lows, of course, right? But essentially, it's becoming less weak, less weak, less weak, less weak as the price was looking like it was getting weaker. That is a divergence, suggesting that I don't want to call it manipulation, suggesting that this price movement to the downside is not where it's supposed to be because the market's getting stronger. And so when you come over here to the 4-hour chart, you also notice that price is dropping. And also, what do you see? You see money. There's more money in the system here. So bullish divergence on RSI, bullish divergence on more money being here, even though the price is getting lower, AKA preparing for the move. So these are some of the ingredients that we could look at, let alone when price was over here, we were talking about the move, a likely move down into this box, down in the 110 to 108 kind of range. And where did we go? We kind of came into the 110, 108 with some wicks into the 107s. But the meat of the move, we've had outlined on here for quite some time. So shout out to everybody. That guy, good morning, Alberta. Granny's Garden, how you doing? Ugin Sky, Kenny Carnial, Pre-Rich. So I'm curious right now. I'm going to do a poll in the live chat. I'm curious right now. Let me go ahead and pull this up. Do you think, where is the polls? I cannot see. Participation. Pop out. Hold on a sec. Here we go. Here we go. Start a poll. Do you think 4-year cycle happens? This is what I'm asking. Do you think the 4-year cycle happens? If you do, then in that case, I'm not saying we're going to have a little drop coming in October. If you're claiming that the 4-year cycle is going to play out, then you're also suggesting that we will top sometime in October and November, and we're going to drop, and I won't say 80%. I would say that if you're believing in the 4-year cycle, let's say more than 65%. Do you think this is happening? Yes or no? Now, if you say no, it doesn't mean that you don't think that we're going to get a little bit of a drop this year. But by saying no, that means you do not think that we are going to, if you don't think the 4-year cycle happens this year, then that means that you think, if you select no, that means that you believe that we're going to be pushing up in 2026. So I'm curious what you guys think. Let's drop it in the, Pre-Rich says the third option. So, do you think we're going to get a push up in 2026? In that case, you type no. If you don't think we're going to get a push up in 2026, then you press yes. I'm curious what y'all's thoughts are here because this is looking beautiful, guys, especially coming into those rate cuts. If you come over to, let me go to Caleb Franzen really quickly here. Caleb Franzen actually marked something that he's been calling out. He's been saying there's not going to be a rate cut because this and this and this and this. But if you zoom back out on this and you realize that he shared, where is it at? Right here. The 3-month treasury yield is officially signaling that a rate cut is coming. So this is that thing, that 3-month treasury yield moving. Look at this, move down, and then we got the rate cut. The rate cut, if you zoom in on this, the rate cut is this green line right here. See how this 3-month treasury yield started moving lower? Boom, sharp downtick. Look, rate cut right after. So look, sharp downtick, rate cut right after. Sharp downtick, rate cut right after. Look, 3-month flat. No rate cut. This green line has been flat, but then look, sharp downtick. What has this signaled? A rate cut. So not only has, we're getting the CME FedWatch tool that's been suggesting rate cut, but now we're getting the thing that we were not seeing. And that is this 3-month treasury yield and also the bond market suggesting it. So we got all things that are in alignment now that we are going to get that rate cut. And that's what we're seeing this morning on also some of the jobs numbers that came out. When you look at the price action, you wonder, why did we just get a little bit of a pop-up this morning? Because we're getting more data. And I talked about this 2 weeks ago, coming into September, because we had the Jackson Hole discussion with Powell being more dovish. There wasn't really, you don't know if he's going to cut the rates until it happens at the FOMC meeting, right? But I said, we got to watch every economic data point that comes out, whether you're watching it on, wherever, on X, on here I do it on the forexfactory.com/calendar. And I filtered this out to just the US. Actually, I guess it all dropped off. Let's go here, turn off AUD, CAD, CHF, turn all these. We're just going to look at the US here. If I can click all of these. Now we're going to do this week. excuse me. There we go. So you see, we have different things: manufacturing, ISM, construction, FOMC meeting, FOMC member Muslim speaks. Jolt's jobs opening. That was this morning. And you see, look, job openings are going down. And when you look at this right here, see the job openings going down. We got a factory. We got all of this stuff is giving different insight to either substantiate for, really driving the nail home about rate cuts or not. So when you see the market take these jumps like we saw this morning, you also see this on the S&P 500. Look at this, nice little, okay, we had the sell off and then boom, now we're reversing. Look at this. This is on those job numbers right in here. Boom, 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 boom. So we're seeing the data give the forward-looking speculators, the market, the idea that it is more likely that we are going to get those rate cuts. Now, of course, rate cuts are a whole nother thing because it's probably going to drive a little bit more inflation. But the problem right now, remember, dual mandate from the Fed is that they want to make sure they keep the job market healthy and they also want to keep inflation down. So we're seeing a number of different things right now that are indicating those rate cuts are coming, and the market is trying to price that in and capture that. So just take note of that and realize that, I mean, guys, what we're seeing right now is nothing short of incredible. The fact that we have an opportunity with the price not running away to 158, 200 right now. We're not getting a blow off top. Let me just say this again. The fact that we look at Bitcoin right now and we see Bitcoin is, oh my God, we've had a sell off from 125 down here to 107, and we're fighting at 112, and we're coming into the 4-year cycle, the end of it. Oh my God. Well, we have rate cuts coming, as we mentioned before, but the fact that we have not gotten a move like this parabolic move, also gives us, this means to me, let's get to a cleaner chart. This means to me that we're going to continue to sustain this sort of healthy sort of stair step for the time being until I would assume sometime in Q1 or Q2 next year, to where we really get some super explosive moves. But the fact that we haven't had this sort of, discordant, massive blow off top also renders the fact that we have a much healthier bull trend. So let's understand that. And then we also got more bullish news. Trump Mining Company, American Bitcoin, will go public on the NASDAQ today. Great. Then we've also got $1.7 trillion Morgan Stanley just disclosed buying $188 million worth of Bitcoin and the Bitcoin ETF in Q2. So we're getting the biggest banks in the world, the biggest investment players in the world getting involved, the president of the United States getting involved, and people are worried here. And then you see, again, highlighting again, Ondo going live, Wall Street 2.0. Let's go ahead and read this. Ondo Global Markets is now live, providing one of the largest ever selections of tokenized US stocks and ETFs on chain with the liquidity of traditional finance. That is trillions of dollars. The question is going to be here, is it going to be a very quick uptake in terms of a lot of activity right on, or are people going to sell off because it takes a little bit for that, the awareness side of people in traditional markets to take advantage of this? I don't know, but we're going to have to watch. But it's 100 plus assets. And the fact that this happens, you realize this is majorly impactful because it's basically really on ETH, right? Ondo through ETH, but then also Link. So Link is one of their trusted partners, and how they are, basically the data oracle between the traditional stock pricing, on those markets, and keeping that in line with what's happening back and forth on the on-chain side as well. So Chainlink is becoming more and more necessary as more things get tokenized. So let's just be aware of that. I do want to also shout out real quick, channel partner Arculus. Remember, as you're stacking in, as you're getting acclimated, as you're making sure you're setting up your future, protect your future. Protect it by protecting your crypto. Head over to getarculus.com. Use code BitLab, BITLAB 20, BitLab 20, and that's the numbers 20 for 20% off. Protect your crypto, protect your future. Best crypto cold storage solution there is. Now, you can also sign up to get in our the trading section of our Discord. Sign up over at Blowfin or at LBank. The links are down below in the description, and you can get involved in there. But let's go over here and look at these key levels. We got some data now. We're going to get in some TA. We're going to break down some of these charts, some of these basically levels we want to pay attention to. And looking here on the key levels, I just want you to notice something here. We got a beautiful band here, and this is a 200-day moving average. That one that's blinking, you can see it. We have the 21-week moving average, this one blinking. And then, of course, the short-term holder cost basis. And notice that we're kind of coming down into that cushion zone, that sort of support band right here. All these ribbons coming right into there. And notice we even got under it a bit back here when we went a little higher than expected before the halving here, breaking to new all-time highs. But we also had that happen here where we kind of pushed up, and I don't know if it was just manipulation or fear or what, but we did drop below the 200-day moving average, the 21-week moving average, the short-term holder cost basis, but we proved the bullish trend really ate this alive and basically has only progressed higher since. Now, when we look at this, if we zoom in on it, I want you to notice something here. We came right on the cusp of this short-term holder cost basis and really did dip below it, but such a small amount. We've talked about this before. When you come over here to the short-term holder cost basis, pull this up. Notice, see this? We came right to it. But this tends to be a pretty good determining factor historically of very strong bullishness. Now, one of the things I want to make a caveat to here is the landscape of Bitcoin in terms of the type of holder is changing dramatically in the last year and a half. There is still a predominantly larger ratio, a larger percentage of retail and individual holders. But as institutions come in, a good number of that huge number of individuals that hold, there's, thousands and tens of thousands of, Bitcoin that have been held for 5 years, 7 years, 10 years or more. The new retail isn't really here yet. There's some small appetite here and there, maybe some stacking through the ETFs and such, but there is just almost like if you have a little, trowel in the garden and you're just digging up, planting a flower versus what you're seeing with a front end loader that just scoops out big. That's what institutions are doing to Bitcoin. They're stacking in enormous ways. MicroStrategy, MetaPlanet, what you're seeing with the ETFs. And there's not just the US ETFs, there's ETFs the world over, okay? And the amount of appetite that we're seeing from institutions is also, in my opinion, allowing them to take advantage of short-term holders, as you see here, because the short-term holders are just wrecking themselves along the way. And we've seen it in the data. The long-term holders are people, even if you're holding longer than 155 days, that's then considered you've transitioned to a long-term holder. That's how, at that level, at 155 days, the amount of fickle, weak-handed buying and selling because of price action changes dramatically. It's like there's a whole different mindset or intention. Of course, there are scalp traders out there. Of course, that's short-term held. But when people are jumping in and jumping out from hope and fear, they're being victim of themselves. And while we've seen this in the past, if we zoom out on this, you can see here in the bull trend, this entire bull trend, the short-term holder cost basis really found support on this all the way up. Again, here, really found support on the short-term holder cost basis all the way up. It's only really on this cycle that we're getting these pretty big deviations below in the middle of the bull run. Okay. So my point here is I feel like because of the changing landscape and the larger pockets at play here, we are going to see this somewhat periodically in the market. So because we broke below the short-term holder cost basis, as we saw here, that was not the indication of the end of the bull run. Okay. We had a great buying opportunity there as it presented, because we're not just looking at this. We're looking at a number of other data sets. And one of those is the price action and what we're seeing on the charts. When we look at this, let's come back over here. Here we go. All right. All right. That's not the chart I wanted. Here we go. So considering where we're at today, price action. Here we go. This to me feels like almost like a Wyckoff distribution, or sorry, a Wyckoff spring, accumulation into a spring down in here, and we're starting to get the breakout. We have the front running signals here. Everybody's expecting a red September. I think we're going to be green. I've said that for some time. I said we'd likely chop into the FOMC meeting, which is exactly what we're seeing. Look at it, just chopping down, now coming up. We really want to see what happens when we get above 114. And that's because on the way up here, remember, CME futures gap pretty big right here. Basically 114, just under it, 113.8 up to about 116.5, 116.6. So this is going to be an interesting zone. The rate cuts, I do think that we will get a pump out of them, but I think there's going to be some chop around them. We've historically seen when rate cuts happen, it could actually end up in a bit of downward pressure on the traditional markets. The question is going to be, does the same thing play out this time? Now, it doesn't happen the same day. It happens over the course of a couple of weeks or a month or two. But this is also going into quantitative easing at the same time that our debt is out of control. And I do think money printing is going to, start to kick back on. We're already seeing, if we come back over to these charts right here, looking at the global liquidity index, this is, just melting higher with a little bit of chop through here. And look at the chop. Can you notice something? Remember how this feels like it's been extended? Well, look at the difference here. Okay, we had a big run up, a bit of a dip, okay, but then it continued to run up. This sustained, much like this price continued to melt to the upside. Well, what do we see in this cycle? Well, is the Bitcoin stair-step price action? Is it because there's becoming more institutional and oh my God, it's healthier because there's bigger players involved? And look at this, it's just stair-stepping up. Well, let's look at the global liquidity. It also tells a similar story. This is pushed up and chopped down and pushed up and chopped down, pushed up, chopped down, pushed up, a little bit of a chop down. So the global liquidity, along with the business liquidity cycle, along with what we're seeing with the adoption projections getting more and more exponential based on the capital channels and the government acceptance of this, not just basically trying to hold it underwater any longer. This has kind of told the story of the chop that we've seen in this bull run so far. If this move that we're about to see, if global liquidity really does start to accelerate dramatically from money printing because our debt is on runaway levels right now, then I think that is when we start to see a potential parabolic rise. If the global liquidity continues to chop like this, push up, chop down, push, then we will continue to see a fairly healthy stair step, which I think would be better all around if that were to happen. But coming back over here, let's look at some other assets. We got ETH to Bitcoin pair coming. Remember, we've talked about this. It's right at that box zone that we've talked about for quite some time. Multi-year downtrend from 2022 came right into it. We've got a nice formation here, kind of falling channel. I don't want to call it a bull flag because look at how short this flag is. If you really want to measure it from where it is, this is not a flag when this is not a flagpole, and the flag itself is like 5 times as long as this little pole. So it is a falling channel though. Falling channels, so bearish. Now understand your patterns. Falling channels tend to break out bullish. Now, we've seen a lot of whipsawing in both directions. It wouldn't surprise me to get a move down, back up, boom, boom. The only reason I highlight this is because this keeps playing out. These falling channels tend to, on every asset, so consider that when you're thinking about crypto, these have a higher hit rate of breaking out to the upside. So although I do think this is going to continue to the upside, I would be a little cautious as to what happens in here until this breaks out. We're going to have a huge... a bit of a headache right in this zone at basically 0.041, 0.0417 kind of zone. So I wouldn't be surprised to see a little chop here, breakout, boom, and then something like that. But this is very important because this is going to be the broader signal for the altcoin market. This is ETH to Bitcoin. So when we come over here and we look at, like, for instance, let's go look at the total two. No, let's look at others, actually. Let's go out of that. Let's look at others. Here we go. So look at this falling wedge. They tend to break bullish. Look, it whipped to the downside. The fake out I was talking about, a push back up, trap people both short, trap people long, came back in, then launched. This is exactly what I was just talking about. These tend to break bullish, this falling wedges. However, this was very scary because it also was a head and shoulders. The markets are giving just confusing patterns over and over and over. So you've got to look at other data. Right? You got to look at the context. You got to look at what's happening. Okay, the breakout, but is this really broken out? Because this is just sideways price action. This is the altcoin market. Everything outside of the top 10, right? Again, for those of you that are new, when I say that, the others chart, it's an index of why is this random? Here we go. Here we go. Um, there we go. The other chart is an index of remove all of these top 10. Now look at everything else. Everything else. You aggregate all of their market caps, and then you get to see the price action, sort of the general vibe of the majority of the altcoin market. Now, this does look like a bottom, came back up, retested, launched. This does look like it hadn't even made its move yet. So for some people saying, I thought it was alt season, why didn't it happen? I think this whole thing has been the setup for that to happen, which may come sometime in late October. I'm talking about the really big moves, October into November. I think there's going to be a lot of hesitation in the space because of the fear of the 4-year cycle. I wouldn't be surprised to see the biggest move sometime in into Q1, into Q2 of next year. But this looks like a massive setup to that effect, right? We have not yet even broken past these previous range lows. But I mean, it just keeps getting compressed into this zone. So let's keep an eye on it. But let's look at Ondo, because Ondo got global markets launched today. We talked about this massive inverse head and shoulders. Okay, cool. It's breaking out right now of this smaller trend line that we see on this. This is not necessarily too small, but this goes back to about middle of August, August 13th. Downtrend, breakout, cool. But this is the sentiment of the market isn't overwhelmingly bullish right now. So there's not a huge amount of liquidity flowing at the moment. Had the market sentiment been a little bit more all gung-ho, I think this would have fully broken out. But I do think we're still in excellent levels for stacking for Ondo. I cannot believe that, it's down here considering it's already gone up to $2.20. But this is kind of the sign. I'd be watching for the interaction of price action up here until about $1.10 to $1.12. Potential rejections. But once we break free of about $1.18, $1.20, this is when I think the real excitement starts with Ondo, when this really goes. People are going to be watching and paying attention to what kind of volume, interaction, transactions, and all this sorts of stuff, the actual utility of the global markets, right? Is it going to get launched and there's zero activity? Is there major activity? And I'm not saying one way or another. I'm just telling you the type of data you're going to want to look at. Maybe I'll do a video specifically on that. And so you guys can see it's not just price action. Guys, price action, whether it's Ondo, Link, Solana, Ethereum, Bitcoin, doesn't matter the asset. The price action is just a result of the psychological general sentiment of everybody in the market for that asset. And that gets shaped by news, expectation of news, expectation of different integrations or deployments, expectations of economic data, whether they be good or bad, and that push-pull sort of energy about bullish and bearish narratives. If more and more people become aware or start to build a very positive bullish outlook in the near term, 1 month, 3 months, 6 months, then you start seeing people stacking into that. You start seeing data like the RSI, like the money flow, like stochastic, like all these different data sets change and will front run your price action moves to the upside. That's how you get the edge in this market. You stop chasing the pump. It's pumping. I want to get in because I don't want to miss it. Well, you are exit liquidity if you do that. You want to see the pattern forming. This might be frustrating, but I see this and I think, good golly, massive inverse head and shoulders. Ondo global markets just launched. We got quantitative easing just around the corner. The world, Wall Street especially, corporate, the big money players, the world's waking up to this. And you're telling me that, man, this is only pumped just a little bit from global markets. Good. The world doesn't know about this stuff yet, whether it's any of these assets you're talking about. Just make sure you're stacking into good utility and good use case and good TVL and good tokenomics, which we break down all these things on this channel regularly. Joe Kelly will keep you informed. Oh, what did Joe say? Joe, bro, we need a new Fed chair. Well, hey, we're getting one May. There's already one on, they have to, by the way it all works out, they have to do that by May of this coming year. But, I give it to Jerome Powell, even despite what everybody says, that he's had to do some of the most difficult threading of the needle with what we've seen during his tenure as Fed chair. But give us those rate cuts, print that money. Let's get this market pumping, baby, right? Avalanche, another one. Kind of, I don't want to say fell off the radar, but just it hadn't really been on my radar to really highlight a lot lately. But I think people are underestimating what Avalanche is going to do because they've got some incredible partnerships. They have some incredible integrations. They're already deployed in some states with their, utilizing Avalanche chains for different, legal things like registration, car documentation, stuff like that. And although that might seem small to you, that's just one of those things. It's like the foot in the door of the government or other corporations utilizing blockchain to print, important documents on chain. That's what NFTs are going to be. When you guys realize that, you realize it's not just some dumb monkey pick. Those were all just proof of concepts. And yes, they'll hold value in their own way because of all that. But the NFTs, and which are going to live on chains, even if you could care less about NFTs, realize the amount of transactions and data that is going to be utilized through NFT technology on blockchains like Avalanche, like Cardano, like Ethereum, like Near. Name the chain, Sui, Say, doesn't matter. Any of them that have blockchains where you see NFTs also. All of the art stuff, that's something cool and fun, cool. It's for the culture. But that's actually, I think the majority of the NFTs that we're going to see over the next 10 years as this really, projects out and the integrations happen is marriage licenses. It's legal documentation. It's car deeds, housing deeds, all of these different small things that are not going to be traded for speculative value, but they're going to increase the amount of transactionability and security and everything that we're seeing on these various chains. All of these chains that we're talking about, and there's going to be other ones that come out, these are going to be the infrastructure plumbing layer of the world. Global finance, global legal, global, every medical, all of these things are going to be working on chain. And then you look at Solana. Solana, again, just working its way. It looks a little bit scary here. I'll tell you why. It's pushing up into this level, but it kind of looks a bit like a rising wedge. Kind of looks a little bit, let's see, I'm just, see this right there. And then you got this one right here. Okay, pop it up like that. These tend to break to the downside. So does that mean it's over for Solana? No. This very well could just disregard this because we have seen consolidation up breakouts. It's going to depend on what happens in the next 2 weeks, especially with the rate cuts and especially with other things here. But this is pushing into those zones. We're seeing a little bit of weakness here. A little bit of bearish divergence has come in with the RSI. This is on the 12-hour. But let's watch what happens at this level. If it does break down, I'll be watching for a bounce down here. And I think it would bounce at the 195s, but I'd like it to hold above 174 if it does break down. But the Solana community is they're incredibly strong. So it wouldn't surprise me for this to be, oh God, it's going to break down because our rising wedge, only to come up and just continue to the upside. So stack in, stack long, do whatever you got to do for Solana. Not financial advice. I just think it's going to be going some places. BNB also looking a little weak here on the 12-hour. Pretty stiff bearish divergence here on the RSI. Much higher highs. Look at this. Much less money. See how this is lower? A lot of money. Less money. Much less money. You understand how this works? When this is high, it's a lot more money coming in. See how it's much lower? And then you see from this point forward, look, price went a lot higher. Went up, 790 up here to, it's a pretty decent amount. Pretty decent move to the upside. About a 12% move to the upside. And yet there's less money and there's less strength. So I'd watch for a little bit of consolidation here before the next move or kind of swing down, then launch for BNB. Cardano, come on, baby. I'm getting less and less excited about Cardano, but I'm not going to count it out because I think Charles Hoskinson is a brilliant guy. Let's see. Got a rising channel here. Okay. On support now. A little bit of bearish divergence coming in. Bearish divergence on the money flow for sure. Big swing down, but this is holding here. If this drops a bit lower, I'd be watching this to go down to about 70 cents. Why? Because we have this low here, this bounce here, this rejection here, this bounce, this chop zone, this support, all of these things across. This is where I'd be looking to kind of reload up. If this is able to push up, I'd want to see it go above 91 cents and then potential continuation up here to about $1.09. Injective, another one of those things is bringing tokenized assets on chain. Doing some work here, just kind of looking soft. Everybody's waiting on that Fed rate cut, right? But guys, BitLab Academy is in the zone. We will all that the membership handed out earlier for him. What? We will all, I don't know what that means. Somebody buy some memberships or something? But guys, I got to run. I have to jump into a call here in a second, but I love you guys. I appreciate you. We'll be doing, I'm in the studio now. You're going to see my walls change as some of the stuff that because I'm going to do it different. You know, I want to dress it up a little bit more. I want to make it a little bit more professional looking. I didn't want just like the podcast studio look because everybody's doing something different, especially here at the Hit Network. And everybody, you know, it's nice to have slightly different styles through each one. I'm going to be interviewing some pretty major players over on Discover Crypto. So figured I'd dress it up a little bit, make it a little bit more, you know, and I'll just give you a hint. Somehow Rome is always on my mind, right? The Roman Empire. But I love you guys. Oh, the poll results. Let's get the poll results. That's right. Are we 50-50 for real? Golly. Man, we got 832 people have been here on the YouTube side. And only 80 of you participated. Appreciate the engagement from you 80. Appreciate everybody else that's watching. Even if you're not engaging, I appreciate you being here. But 50-50 for your cycle or not. But we got 1,985 people tuned in here between the different channels. Super excited about what's coming here in the near future. I love you guys. I appreciate you guys. Everybody hit the like button on your way out. Wherever you're watching, make sure you're subscribed, whether you're watching on X, whether you're watching on YouTube, whether you're watching on Rumble. I would advise heading over to YouTube and giving a follow there and tuning in, you know, making sure you're subscribed. Making sure you're subscribed, you know, come down here. Look, are you subscribed? Make sure it says subscribed and turn on your notifications because some of the membership stuff I'm doing, even if you're not a member, sometimes you'll get the notification, especially if you're a member, turn on your notifications here. If you're not, you want to become a member, join. You can join right there. It'll say join once you're subscribed. And then it's about $1.25 a week. But I love you guys. I appreciate you guys. Adios.